In this video, we're going to talk about the IRS update to the unemployment benefits, both for state and federal. So this includes your state benefits and the additional $600 and now the additional $300 in unemployment benefits. And I'm also going to talk about what the maximum amount of unemployment compensation that you can receive in your particular state, and also how to calculate those taxes. But before we do, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. So yesterday on the IRS's website, they released a notice reminding people that are on unemployment compensation that you have to pay taxes on all state and federal unemployment benefits. And there are two ways that you can set up withholdings on your federal unemployment compensation to withhold your taxes. You can either fill out this form, which is the W-4V, and the V stands for voluntary withholdings, or you can go on your state's website or call your state unemployment and ask them to do withholdings. Now, from what I gather, on most states, it's going to be through their individual portals and not actually filling out the W-4V, but call your state unemployment to make sure that you're withholding the correct amount so you don't have a huge tax surprise at the end of the year. And the reason this is more important than ever to make sure that you're withholding the correct amount is because unemployment compensation has not only been extended, but we've also got the additional $600 and now the additional $300. So I was going through all of the unemployment numbers by state and figuring out which state has the most and which state has the least amount of unemployment compensation. And you can see right here that Massachusetts has the highest amount at $823, which goes for 26 weeks in a normal year. And that is $21,398 is the maximum amount that someone from Massachusetts who is on unemployment could possibly receive. Now, the least amount, surprisingly, if we switch it up here, is Mississippi at $235, but that amount goes for 26 weeks. So their maximum is $6,110, but that's actually not the least amount in the country. If we put the total amount order going down, we see that it is Florida with the least amount in unemployment compensation, and that's at $3,300 maximum. So that is the $275 multiplied by the 12 weeks. So that is the most that someone could get from the state of Florida. Now, because of the CARES Act, which extended it to 39 weeks, and in some cases even further, and I'm going to show you that in a minute, but if we multiply it out by 39 weeks, that bumps Florida up from $3,300 maximum to $10,725. Now, the maximum amount or the maximum weeks is in the state of Montana, and that's because they're the only state that goes for 28 weeks in a normal year. So when you add the additional 13 weeks is what the CARES Act provided, it brings it to a total of 41 weeks. So their base maximum in a normal year is $15,456. Now we extend it to the full 41 weeks, and that's $22,632. Now the reason it's so important to pay attention to the unemployment taxes is because not only is it all taxable, but in a normal year, if we're looking at singles at $12,400 for the standard deduction and $24,800 for the standard deduction for married filing jointly. If you look at the base benefits, there's a lot of scenarios in there. If this is all you're getting, or you're only getting a little other compensation in addition to this, then it might not put you over the threshold to pay any taxes. So if you went on unemployment early in the year and only made a little bit over, say in Florida for $3,300, and you're single, well, you're going to be below the $12,400, so you're not going to have any tax liability. But if you earn significantly more, which is what's occurring in a lot of these cases, then you might owe more than you might think. It might even put you in another tax bracket altogether. So if we look over here, if we add the additional $600, then the maximum that somebody could get in the state of Florida then goes from the base of $3,300 all the way up to $20,325. And the maximum under the CARES Act provisions would be Massachusetts, where someone could get a possible $41,697. Now that would also require that they're on unemployment for the full 39 weeks, and they're also getting the maximum amount from the $600 additional benefit. And then if we go a step further and we add the $300, so right now it's $300 and it's being floated, that will convert into basically another $300. For some states, I think there was only one state, it was South Dakota, that declined it so far. But for those states that still have the $300 or are going to implement the $300, then it bumps it even further. So the maximum amount for Massachusetts would then be $47,697. And the state with the least would be Mississippi with $24,765. So if someone is getting the maximum amount of unemployment benefits by these calculations, they're going to be over every single threshold of the standard deduction, meaning that they're going to owe some taxes. Now, if you have other credits or deductions that might reduce your taxable income, then you might not owe those taxes. But if you don't, then you're going to have a tax liability. And then I ran what the percentage increase from the base benefit in what we're calling a normal year, like 2019 and prior, to 2020. And with all the additional benefits, the maximum amount or the least percentage increase is Massachusetts. The reason is because the base benefit is so high. It's $21,398. And then it goes up to $47,697. And that is a 123% increase from what a normal year would give in unemployment benefits. And if we figure out what the highest is, that's the state of Florida. And that's mainly because they had such a low base of only a maximum of $3,300. And then it grew to $26,325, a 698% increase. Now, if you're interested in other states, let me know in the comments down below and I'll give you the numbers. But let's jump over to the tax withholding estimator so I can show you not only how to calculate it, but to give you an idea of what you actually need to pay. So this is the IRS W-4 estimator, and this is going to help you estimate your withholdings. Now, normally you would use the W-4 estimator to give to your employer to do federal withholdings, but you can also do this with your state unemployment department, or you can fill out the W-4V, and that's V for voluntary withholdings, to make sure that you don't have a tax surprise at the end of the year. So this is going to help us estimate exactly how much taxes we could possibly owe, not only on our unemployment, but overall. So we're also going to add in any other compensation that you might have received. And I'm going to walk you through quickly just to show you how it's done. So if we assume that the individual is single, I'll say that we have no dependents or no one else can claim us as a dependent. We don't have any dependents and we do have income, and we're going to select that we have one job. Of course, you can go in here and adjust it and fix it to your financial situation. And then we're going to say we have no pension. And right here, there's a checkbox for unemployment compensation. And on the next screen, we're going to be able to put in those projections, or you can put in what you've actually had. So it doesn't matter at this point if you've received unemployment and are off unemployment, or if you're going on unemployment or you're still on unemployment. This will give you the projection and you can adjust it any way that you want just to see what it will look like. And if we click on next, go to the next page, and we're going to say we're going to have this job all year. Of course, put what works for you. If you've only had it partway through the year, or you're going to have it for the rest of the year, then what you want to do is say no, and then you could put those dates. And if you expect to have this job through December 31st into next year, then just put December 31st. But I'm going to say that we had this job all year just to make this easy. I know we're also getting unemployment benefits. There are a few states where you can still work and collect unemployment, but for all intents and purposes, I'm just going to go through this really quickly. So let's say that we got a paycheck on April 1st. It doesn't matter for the walkthrough, and we earned $10,000. And you can get all this information from your last pay stub. And if you have multiple pay stubs, put in multiple jobs, even if you didn't work there or don't work there anymore. And then we can put that we didn't withhold anything year to date. Of course, again, you can look at your pay stub from your job. Obviously, this is going to be for unemployment compensation from your employer to see what you've already withheld from your federal income tax withholdings. Then if we scroll down for this walkthrough, we're going to say that we don't have any 401ks or any other pre-tax benefits, such as an HSA, a healthcare savings account, or an FSA, a flexible spending account. And then here is your unemployment. So the unemployment year to date. Let's say we put in $20,000 and we didn't withhold anything so far. There was no voluntary withholdings. We're going to put in 0. Then we click next, and we're going to go to the next step. We're going to skip adjustments, and then we're going to take the standard deduction. You can see it right here For a standard deduction of somebody that's filing single, that's $12,400. We click on next. We're not going to take any credits. We're going to go to the next page, and then we can see what our anticipated tax obligation is, $1,473. If we scroll down, we could see all the math that we put in, and we could see that we have an adjusted gross income of $30,000, and that makes up $20,000 from our job, or $10,000 from our job, and $20,000 from unemployment, and the total is $30,000. Now that's going to break down with a standard deduction of $12,400, leaving taxable income at $17,600. Now, because we're under a certain threshold, it's going to give us the earned income tax credit at $445, and that's how it gets to the $1,473. And it's giving us an idea of how much taxes we would owe if this was our scenario, where we earned $10,000, got $20,000 in unemployment benefits. How much taxes am I going to have to pay overall? And for your federal income taxes, the unemployment benefits bake right into that equation. So they aren't taxed any differently. There's not a special tax bracket for unemployment compensation. Now, withholding taxes on your unemployment compensation isn't required, but you're going to end up owing taxes on that unemployment compensation, just like you will with any of your compensation for 2020. So when you go ahead and file your 2020 taxes in 2021, you just want to make sure that you're prepared and then you're not surprised with a huge tax bill. And that's how you figure out your unemployment taxes. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.